Hey fellow investors and fellow stock guardians, it's Wednesday, February 17th, 2021. I'm Hoda, co-founder and CEO of StockGuard, reporting to you from another mixed stock market. The stock market indices, especially the Nasdaq index, dipped somewhat drastically mid-trading day. While they did recover gradually in the afternoon, the upward movements weren't enough to get them above zero except for the Dow. The market movements may seem gloomy, but remember, indices are hovering near all-time highs. Therefore, the market situation is not gloomy by any means if the subdued end-of-the-day returns in the last few days have got you worried. The Fed released the notes from its January meeting, and as we have discussed before, Fed's official plan to retain the interest rate near zero until the inflation rate hit the target 2%. They also believe the economy is still far from recovery and more support is needed until full recovery. Today, let's mix it up and start from the losers list, among which Stampscom grabbed my attention. Shares were down by more than 15% in the after-hours trading. If you don't know the company, despite its old-school name, it provides the technology that any online retailer can use to manage the shipping nitty-gritties of its operation. For example, calculating how much it costs to ship something and printing the shipping label and so on. This company has an interesting history in the stock market. A few years ago, Stampscom was a not so well-known but well-managed, cash-rich, quite successful stock with an exclusive agreement with the United States Postal Services and a quiet beneficiary of the rise of e-commerce. In 2019, it decided to get rid of its exclusive agreement with the USPS, and the stock price crashed by 50% or so at least 2 times. Everyone assumed the company was doomed for an agonizing death. But truth behold, the Stamps.com used its newfound freedom from USPS to integrate its technology into e-commerce platforms such as Amazon and other postal courier services, and the stock price rocketed from approximately $3 per share to more than $200 per share. To me, Stamps.com is an enabler of the world's transition to digital commerce, and it has proven to be a resilient and well-managed company that is consistently underestimated by investors. Today's price drop comes after an excellent quarterly earnings report. It managed to meet and far exceed analyst expectations by its revenue and profit performance. So why did the price drop? The management didn't provide any guidance for the next quarter, citing 2021 to be a challenging year with a lot of uncertainties. It seems that the lack of guidance spooked investors who rushed to lock their gains before it's too late. I used to own this stock and I'm adding it back to my watch list for a chance to take advantage of market's mispricings once again. By the way, while we're talking about e-commerce, have you looked up the future of shopping list of stocks on the Discover page? It includes the list of companies that are either directly operating online retail stores or enabling digital commerce by providing digital payments, packaging, and shipping services such as the Stamps.com. Type in future of shopping in the search bar on a StockGuard's Discover page and get the list. Interestingly, the winner stock of the day is also a shopping-related stock. The winner stock I'm talking about today only moved up by 0.57%. However, it has hit an all-time high record recently, despite being the only big retailer I know of that has no e-commerce operations. Let me repeat that. It's the big retailer, its stock has hit all-time high, and it does not have any online operations. Intriguing, right? Burlington Store, ticker BURL, is an off-price retailer that you can find anything and everything you need at a discounted price because it buys and sells branded items that didn't sell at a full price in department stores. The company shut down its online operations just before the start of the pandemic last year. You would imagine with the pandemic in full swing, Burlington Stores must have been headed for bankruptcy. But instead, the company has had an excellent 2020, opening more than 60 new stores in the year to serve its price-conscious customers. It is truly an astonishing winner story going against the prevailing global e-commerce trend that was very hard for most investors, including me, to believe. Well, the stock market never stops surprising us, and Burlington Stores is certainly a perfect example of that. As always, if you like to give a Stock Card VIP a try, to research as many stocks as you want and follow successful investors' portfolios, use promo code ROLLWITHOURCEO, all lowercase and in one word. That's it for today. If you like these quick market recap reports directly from my daily stock market research, please like and subscribe and share with your fellow investors. I'll see you tomorrow.